Welcome to the Daily Update Podcast, where I'll go over the action in the market for Tuesday, June 3rd, and we'll see how things look for Wednesday, June 4th. Recapping what happened on Tuesday, the markets staged a solid recovery after Monday's softness, opening flat but gaining traction as buying interest took hold, fueled by a touch of FOMO, the fear of missing out. The S&P 500 advanced, closing up 0.58% at just under 5975 with below average volume. The index cleared its R1 pivot at 5962 but fell short of R2, signaling resilience but not runaway momentum. Market sentiment remains upbeat. Investors brushed off mixed economic signals with an optimistic lens. The VIX, or fear gauge, settled at 17.69, below the very important level of 20, reflecting lower anxiety. Momentum indicators are mixed. The Williams percent R, CCI 14, and stochastics are showing positive readings, while others, such as the slope oscillator, is actually declining, with others remaining flat. The NASDAQ 100's bullish percent index dipped slightly but remains strongly positive, with overall sentiment holding at a neutral to positive reading of 56. On the economic front, the JOLTS job openings rose to 7.391 million from 7.2 million, a bullish signal for labor demand. However, factory orders disappointed, dropping 0.37% month over month against expectations. Sector-wise, megacaps and semiconductors powered the rally, with tech firmly in the driver's seat. Notably, media buzzed around Elon Musk's critique of the Big Beautiful Bill, calling it a disgusting abomination over debt concerns, underscoring ongoing debates about fiscal policy. Market dynamics painted a picture of a market climbing a wall of worry. Hedging activity leaned towards puts over calls, hinting at caution ahead of key economic reports. Growth stocks outrose value, and large caps outperformed the mid and small caps, though small caps showed signs of life. Technicals, including the Heiken Ashi and Renko charts, have now turned positive, but the market remains range-bound, lacking a decisive breakout above recent highs. Looking ahead to Wednesday, June 4th, several events could help set the tone. Key data releases include the MBA Mortgage Applications Index, the ADP Employment Change, and the ISM Services Index, expected at 52, where a reading above 50 signals expansion. Geopolitical developments, particularly around tariff announcement, could also sway the markets. Seasonally, June 4th has historically been negative for the Dow and S&P 500, where it's neutral to negative for the NASDAQ. However, post-election trends suggest potential positivity after the 4th. For traders, pivot points are available on the YouTube community tab for this channel. The market's bias remains positive across the short, intermediate, and long-term time frames, but it's not trending. A breakout requires stronger follow-through. Risks to watch include mixed economic data, particularly employment reports and ISM services. A drop below 50 in the ISM services could signal contraction and dent sentiment, while sustained strength might bolster stocks. Geopolitical headlines, especially on trade, could add volatility. In conclusion, Tuesday showed a market with positive momentum but stuck in a range, with subtle technical improvements but no clear trend. It is always important to stay vigilant for Wednesday's economic data and geopolitical updates, as these could be the catalyst to spark movement or keep us range-bound. The lack of consistent follow-through remains a key concern. Thank you very much, and I'll talk to you in the next podcast.